gave up managing billions to become a better investor. Episode 11, In Limbo at the Tower of Babel. Hello. Mark Twain once said that the secret of getting ahead is getting started. Something I completely agree with. So finally, here we are with episode 11 of this podcast series. Of course, if you haven't listened to any of these before, perhaps listen to some of the previous 10 and you get some kind of feel for what I'm going to be talking about. But anyway, you find me at an interesting moment because we've sort of finished what I regard as the 6.5 week cycle. And I say that because for 6.5 weeks or so, we've had lots of corporate earnings numbers. And for me as a global investor, somebody who is quite equity centered, really, that's a kind of a busy and interesting time period. So I've kind of seen the world, or have seen the world for the last sort of 30 odd years or so, as a sort of a 6.5 weeks on earnings season and related excitements, and 6.5 weeks off sort of timescale. Now, the off, of course, doesn't mean that you don't get macro volatility, geopolitical matters, loads of issues which push stock markets, bond markets and related around and about. But you don't also get that frenzy of sort of corporate results numbers, thoughts, have they beaten, missed, or the like. So you find me at an interesting time, a moment where I'm sort of thinking, okay, what has the corporate earnings season over the last 6.5 weeks or so, what's it kind of made me think about? Am I more excited than I was about the rest of 2023 and beyond? Am I more cautious? What am I doing with portfolios and investments? What am I thinking? 3 thoughts, really. The first is that the corporate earnings season has been workable. And I quite often conclude that because it's not so much whether corporate earnings are beating or missing expectations. I mean, I hate to tell you this, but a lot of companies on average beat expectations because, of course, hopes have been lowered over the few weeks before the earnings season starts in order to beat those lowered hopes. What's kind of more important is what the companies are saying about the future. What's the comments in their conference calls and related? What are they telling you about the world, about the way it's shifting and moving and related? And I have to say, having listened to, once again, far too many corporate conference calls over the last 6.5 weeks or so, the world remains, as we all can see, and is always the case, I guess, an interesting place. But I'd say from a purely stock market investment kind of perspective, a very interesting place. Companies, I think, are moving away from concerns about inflation, and they're sort of still, though, seeing what I would call, again, rebuilding concerns about whether things such as pricing power is going to stick, where their margins are going to be, and hence, what does it mean for sort of stock market valuation and the like? In short, what I would say, and I guess this is my second most important point, apart from a generally all right and workable earnings season, it clearly, unbelievably still is saying to me it's an active investing world. And for me, that's very exciting. I think, as I've talked about in a previous podcast, too much of the 2010s was everything is awesome, everything is working, everything is going to be absolutely fine, super low interest rates, lots of potential borrowing and lending money out there. Everything could possibly happen positively. When, of course, we all know what the reality is, which is matters are always a bit more tricky than that. And I think, obviously, matters with sad COVID issues, geopolitical challenges, bits and bobs of inflation. In fact, in many countries, more than a bits and bobs of inflation, but certainly a lot of inflation compared to previous times over the last 10 or 15 years. These have all created issues and problems which many investors are just being introduced to or perhaps have forgotten about. Worryingly, I guess, as someone who's been around for a little time, I hadn't forgotten about them. And consequently, it doesn't surprise me that what we're seeing is investors now saying, well, hang on, I need to start to compare and contrast what my loved companies are kind of doing, what they may be doing in the future, how we should be valuing that and related. Third point is really geopolitical or macro-centered. And as I discussed before on a previous podcast, I kind of see the world as an investor, one where you should be spending 25% of your time on macro and related matters. And I know it may sound boring to some people, but believe me, it's super important if you want to understand whether a stock, sector, area, asset class, whatever you want to think about, is cheap or expensive. The rest of your time should be on more sort of stock-centered bottom-up analysis. But if you're not doing both, then you're not going to be able to think sort of successfully or sensibly about the world, in my opinion. So from a macro perspective, it remains an interesting, yes, a little bit worrisome, but not impossible place. We still sadly got some issues in Ukraine to worry about and watch and consider the impacts of. But recent G7 and G20 meetings have kind of said to me that actually the world is not impossible. There is still lots of changes and shifts going on. And frankly, when haven't we not seen shifts and changes in the world? But what I do observe still is that the amount of global trade that is occurring, despite some of the sort of correctly the angst and concerns with Russia, where clearly there is less trading going on, quite correctly so in my opinion. But there's also been obviously a lot of issues and concerns about, well, what is the relationship between America and China and sort of geopolitical matters around that? And I think a lot of those issues have been overstated. Whilst I do not anticipate either China or America massively increasing their trading, respective trading between the two of them from this current point, what you've got to realize is that the absolute level of trading between the two countries is already huge material and will clearly continue. I would still say, though, that both countries will be looking to increase more proportionally other areas. And we could talk about different ways and different manners around that, perhaps in another podcast. But certainly when you sort of mix it all together, I find it kind of an interesting world, clearly an active investing world, which makes me excited. And so kind of, do I feel that, oh my goodness, this is, I'm in complete limbo. There is uncertainty. I don't know what to do. I want to hide under the bed. I want to hold a lot of cash. I want to have a lot of money there just in case there's a complete crisis and I need to have some spare cash to perhaps invest in the market or pay my bills or whatever it is. I'm quite calm about that. I'm not so worried about those concerns. My observation is that as a position selector, as an asset allocator, you can still find plenty of things to be doing. What I find really intriguing and fascinating is much more, well, where are those sort of main attractions? Where should we be putting our money? What should we be doing over the rest of 2023 and perhaps into 2024, if you can think that far ahead? And we'll pick up some of these sort of thoughts and issues in due course. It's funny. The reason why I called this podcast In Limbo at the Tower of Babel is because I've mentioned the sort of in limbo bit, this sort of anticipation that a few people are a bit in limbo as investors. They've seen things over recent times that have made them uncertain and cautious, or perhaps have thought, oh my goodness, the risk of recession now is once again too high. I'm just going to hunker down and be cautious. But the Tower of Babel bit is sort of, well, we of course can talk about the famous story from the Bible and related the sort of the origination of multiple languages and related matters, the kind of the global perspective, a sort of a range of different insights and influences which perhaps don't immediately kind of fit together. And that is, of course, the world that we live in. And even though for the last 30, 40 years, we have seen a remarkable improvement in global trade, and that fortunately and wonderfully still continues, I would also observe there have been shifts and issues which are still apparent. Nobody is, and quite rightly so, really, exactly the same. I'd be concerned if everybody was thinking exactly the same, looking at the same things, doing the same things. You want to see some difference in the world, not just between different countries, but inside a country. That's how it should be. People should be thinking what is interesting, what isn't interesting, and having different views and opinions on that. And as an investor, you've got to accept that nobody's always going to sort of believe in what you do. What you've got to try and think about is, what are the majority of people thinking? Is that correct? Could that change over time or not? And I've talked before in previous podcasts about the importance. I was taught very early in my investing career that you need to know better than 90% of the market. And if you could do that and achieve that, and again, look at a previous podcast to hear me talk at length about what Mr. X taught me and related matters. If you can achieve better than 90% of other investors, then believe me, you'll do better over time in those particular areas and stocks where that's relevant. What I find intriguing, though, is that once again, we still got a lot of people worrying about, oh my goodness, are we going to see some horrible event, some horrible concern, which is going to mean that it's impossible to invest? And it's funny, the one which strikes me most recently is actually not some of the aforementioned kind of geopolitical or macro issues, all of those which are still important, and we'll perhaps touch on a few of them in a few minutes' time. So I was going to initially mention some of the thoughts I've been hearing over recent weeks regarding AI. Now, I know AI has suddenly become very trendy, which makes me smile in a certain way because, my goodness, I remember talking about AI matters a decade plus ago, maybe even 12, 15 years ago. And frankly, it has been developing or becoming more influential or important in the investment world for a long time, and quite correctly and rightly so. What's kind of interesting over more recent times is that it's suddenly become a big concern, oh my goodness, it's here, it's changing the world for good or for bad. Let's look at the sort of good and bad aspects. I guess the good aspects you hear a lot in conference calls, which is we are pushing AI, it's going to help our business, it's going to make us more efficient, cleverer, it's going to make us a relevant business for the next decade. Hence, please buy our shares, they're cheap and undervalued and underappreciated. The flip side, of course, is the, oh my goodness, AI is changing the world, we're all going to lose our jobs, we're going to be run by robots, it's going to be a Terminator type world if we're not careful, or something like that. Of course, both aspects are kind of overstated. It's quite remarkable the number of companies who have suddenly seemingly discovered AI. I'm not kind of sure how super relevant it is for their business or their profitability this quarter or next quarter, but hey, it's good that they're talking about their medium-term thoughts over the next 5 or 10 years. But it's kind of fascinating how it was something which was mentioned, I guess, in sub 10%, let's call it, of conference calls. And now it's more like over 90% of conference calls, the obligatory mention of AI. By contrast, the pessimism has massively, in my opinion, been massively overstated. I mean, where do we start with this? I guess if we push it back enough times, there was perhaps similar discussions about, oh my goodness, the wheel. Is the wheel going to change the world in negative ways? Is the Industrial Revolution going to impact us? Well, we know that there were certainly concerns about that. Is the rise of global trade going to be a problem? The Renaissance, I mean, where do you stop? The dot-com boom, I guess the initial rise of mobile phones and related. I mean, change always happens. And my view on change is it should be embraced. It should be liked. Some change is clearly poor and something which is unattractive over time and perhaps probably should be ultimately banned or stopped or whatever is relevant to it. But frankly, the vast majority of change is actually a good thing. I mean, if you ask, I know it's now something where if you ask the generation before, is the world a better or worse place? Now it's easy for many of them to say, well, actually, I think it's a worse place. This is more expensive. This is trickier. This is more uncertain. Things were better when I was a youngster. Maybe everybody thinks that, but maybe when you were a youngster, you didn't have that kind of broader capability, that sort of wise brain that maybe we all hopefully have to some extent nowadays. My thoughts would be, though, it's far easier to ask, if you could, if possible, 2-3 generations before. Sadly, many of us can't do that anymore. And if you ask people 2-3 generations before, I'm sure they would say, well, yeah, the world is still tricky. The world still has issues. Yes, it is more expensive, but my goodness, the world is a better place than it was back then because of XYZ, be it everything from not just mobile phones and the internet existing or matters like that, but cars, transport, movement, maybe opportunities to buy your house, maybe things where you could see and do things that 2, 3, 4 generations ago, the vast majority of people, and I appreciate I'm not talking here for the ultra elite, which sadly I'm not a member of, but clearly perhaps would have a slightly different view. But for the average person, and fortunately, you can still see the world, I would say, still improving. I know we've already talked about geopolitical issues, which are still out there and discussions and related. But believe me, when you push it back to really previous times, 100 years ago, 200 years ago, is the world seriously not a better place? I think it is. So I would say on things like AI and related other changes, do I overtly worry about them? Absolutely not. Do I think ultimately, a bit like most things in life, it will be more regulated? There will be new thoughts about it, new ways to monitor and relate to matters? Of course, that will occur. On a net basis, though, does it make the world a better place? I think it does. And I know it's hard to say that or think that maybe today when people are concerned about, will I keep my job? Is the computer sort of making all the decisions for me? Am I listening to a computer nowadays all the time, etc., etc.? Is this sort of slowly making the human life irrelevant? I mean, ultimately, change occurs in many different ways, and actually from change we find ways to live, I would say, broader, more ultimately extended and useful and attractive lives. I know not everybody will agree with that, but that's my perception. So am I particularly worried still about the future? Absolutely not. That doesn't mean that, oh my goodness, every investment is a buy. I think we're now at the point, and this is where we kind of come on to the second and third parts of my thoughts really, where we have to think carefully and cautiously, because there are some things which are happening which we haven't seen before, or we haven't seen in more recent times. For example, the in more recent times period would include inflation and interest rates. And as I talked about a few minutes ago, the 2010s were an aberration. We've talked about that before in previous podcasts. And as an aberration, it makes me smile because, of course, to me, the 2020s looks remarkably similar to periods of time that I've seen myself. In fact, every period of time apart from the 2010s, which makes me smile that people are so anxious about it. It's just that it's sort of much the last 10, 15 years has been kind of what they regard as the normality. And obviously we've had bits of extreme volatility, obviously matters with COVID-19. Clearly, I mean, you have to say that was something out of left field in terms of something that was hard to predict, but then impacted us all, or almost all of us, completely. But you've also had, obviously, circa 15 years ago, international economic crises and related, which, again, periodically, I hate to tell you this, are going to happen, irrespective of whether the world is becoming cleverer, whether AI is thinking about a bit more by this or that, whether governments are becoming savvier and smarter with their balance sheets and debt levels and the like. Of course, they're not on that front. But when you put it all together, the world will always see volatility. But I would still say when you compare A to B, a time period, a sort of a generation or two ago versus today, the world has made advances. And what I'm still very excited about, and you've heard me talk about this on previous podcasts, certainly, when I think about it from a global investor's perspective, because I am a global investor, I might be centered in the UK, but in terms of my investment orientation, it's always been as a global investor, and hence my allocations, be it via my choices of equity selections, my other selections as an investor, are very much from a global perspective. The UK is a nice country, an important country, but not the only country in the world. And you have to be a global investor at some level, in my opinion, in the 2020s and beyond. And I think that's very exciting, just because the way the world is shifting, evolving, growing, and ultimately, if you want to put it this way, becoming richer. You put all of that together, that's quite an exciting backdrop from my perspective. So when I pull it all together, am I, oh my goodness, I'm really worried, things are kind of very uncertain and related? I would say, sure, you can make a case for that. There are issues to be worried about, issues to be concerned about, issues which earnings season, geopolitical matters of recent times and the like have sort of pushed you into. But should you be putting all your money into cash or into your back garden or something? The reality is absolutely not. My other observation is that as an investor, you desperately need to be an active investor. And it's funny, I was looking at a recent graphic, two recent graphics actually of interest. The first one showed the performance of the Dow Jones index in the United States since its inception, which I believe was 123 years ago, almost to the day, which is a pretty decent time period. And obviously there's been bouts of extreme volatility. Obviously 1929 and various parts of the early 1930s being a good example, matters around World War II, issues in the 1970s, more recent times with COVID, global financial crises and the like. Clearly, there has been plenty of bouts of volatility. And you may recall that I've previously shared the stat that on a daily basis, frankly, it's just a touch better than a flipped coin, whether the stock market will go up or down. Fortunately, it's sort of slightly skewed to the going up basis, but it's still sort of, 50.5% whether it will go up, and hence 49.5% whether it will go down. But over time, you have made money in the financial markets. And okay, whilst the United States and the UK, to that example, are specialist backdrops. I mean, we may have talked before about the fact that clearly you'd have a different perspective if you'd been investing in, I don't know, the Chinese or various European stock markets, which have crashed completely during certain unfortunate war periods, of course. But from the perspective of, as an investor, where you can actually find things to do and things to allocate to and related, the world remains an interesting place. Here's the other graphic that I saw. The other graphic showed the difference between growth and value investors. And I know it's very trendy to be a value investor. And you say, look, value is always what matters. Value is the out, is where you're going to go to over the medium term. Values is the truth. Growth, or sort of the hope that some tomorrow might exist or not, well, we all know. I mean, we've talked before about Sir Isaac Newton and his thoughts about trying to predict stock markets are so tricky. It doesn't always happen. And that is very true about growth. Growth sometimes doesn't occur or is over anticipated and disappoints. .com boom to bust in the sort of either side of the year 2000 is the perfect example of that, at least in my personal experience. But you see that Bitcoin in more recent years, some people would say house prices in more recent years as too. But, you get plenty of natural volatility with growth. But I found it interesting that over the last sort of 20 odd years, certainly since the start of this century, growth has outperformed value. And people were sort of saying, well, it's time for value to catch up. I guess some would be saying, well, hang on. No, growth has always been the outperformer. It will continue to be that case, particularly when we start talking about developing markets and matters and areas like that. I kind of see a bit of truth in both, but actually I would take a deeper truth from all of this. And I apologize if I've said this before, but it strikes me as important. When I was starting in my investment career, one of the first sectors that I looked at included areas such as financials and banks and consumer stocks and things like that. And it struck me as kind of interesting that financials were perceived as growth stocks back then. Commodity stocks, mining stocks were perceived as value stocks, and consumer stocks, well, actually nobody really knew what to do with those because they were all over the place. And of course, it's the latter, the consumer stock area, which has become an even more important part of the world, which is perhaps the most insightful of this little observation. Because of course, famously, and you'll know this, of course, most banking stocks have gone from being growth to value, particularly here in the UK, the States and other places. And I guess it's over time that will continue. Commodity stocks have periodically moved into growth perceptions, and certainly been very kind of clear in various parts of mining and even oil and gas over certain recent years. But actually the reality is, and I think consumer stocks have got it right, you get a bit of everything in every sector. And this is why you go back to this notion that you should be spending 25% of your time on macroeconomic work. Because if you don't, you're not going to be able to spot the changes and shifts and evolutions of this world, which is so important for any investor, irrespective of whether you're equities, bonds, gold focused, infrastructure, or other alternatives, whatever it might be. Believe me, when you look at the realities of the investment world, the simple notion of whether you're a value investor or a growth investor is so erroneous. It's much more that you've got to be an active investor. You've got to be thoughtful about what other people are thinking, what is going on out there, and hence what you regard as cheap or expensive. And we've talked in the previous podcast about some thoughts about how I've been thinking about that. It struck me that, and certainly it will be the focus of the next podcast number 12, is going to be, so what has the last earnings season kind of taught me in terms of what stocks, what sectors are interesting, where am I going to be shifting my money and why? And actually, it's interesting. It's going to include, I think, a couple of thoughts about 2 shares, which I'm actually going to probably be selling, at least materially some of, which have been favourites for a number of years. And by contrast, there will be a couple coming in which have been stocks that I've ignored or thought were over expensive for a number of years as well. Things change, and it's not perhaps in ways and forms that perhaps you would think about naturally. And to me, that's exciting. That tells me that this active investing world is by far from being impossible, but it's one where you've got to be truly active, both kind of intellectually, that kind of combination of a good chunk of macro work with a good chunk of bottom-up stock picking or investment selection sort of work, depending on which area of the market you're looking at. But additionally, you've got to be kind of aware that you can easily be wrong. Sometimes things change. You've got to sort of acknowledge the fact that other people may have different views. And guess what? Everyone is just a marginal investor, unless I guess you work for some massive investment company with, mega tens of trillions or something of assets under management. But even they ultimately are marginal investors because, of course, they may have a view at one particular day. But if that view is incorrect, let's say it's an incorrect, wrong view, at some point, day 100, day 1,000, Mr. Market will be saying, hang on, guys, you're wrong on this, and people are changing their mind and opinions. And this share price, this bond yield is moving around in different ways than you hoped for. Or the same from a central bank perspective or a government perspective. Believe me, you've got to ultimately be correct and on the money. Otherwise, things ultimately will move against you. But the good news is, are there still things to be doing? Absolutely. Is the world an impossible place? Absolutely not. And really, there are things still to be excited about. That's my main view so far as 2023 has progressed, and certainly from the last corporate earnings season. So really, I'm excited. Anyway, more in the next podcast about some thoughts about certain individual shares or perhaps views on that kind of asset allocation perspective, where my thoughts have been evolving and shifting on that front from an equity, bond, cash, gold, infrastructure and related perspective. But more on that on podcast number 12. In the meantime, thank you very much for listening. I hope that was useful, and speak again soon. Bye-bye.